Hey, hey, how you doing? How you doing? All right, this is RT. I'm going to explain to you the three confluence strategy that I use. I'm hoping that I can make it simple so that it'll be easy to follow. All right, this is an example of one of the trades that I took today, and it was successful using the three con strategy. Now, what I'm going to do is I'm going to use the replay. And I'm just gonna pick the time before. Now, these are the things I'm going to be looking for, right? Let me get that out of here. We don't need that. All right, these are things I'm going to be looking for. The only indicator that I'm going to use is the 50 EMA. All right, just the 50 EMA, and that's it. And price action. That's all I need. All right. What am I looking for? I need price to break and retest, but I need a particular kind of break and retest. I need the breakout from a level to be clean and uniform in color. All right. That means all of the bullish candles are going to be the same color. When you have an odd colored candle, that's price creating structure, and that's going to be a speed bump when price is moving from your entry to your TP. I'll show you in a minute. All right. So we need a clean break of the level. All right. Preferably more than one candle. All right. If it's a single candle, if it's quick, what you want to be aware of is if it's a single candle that's breaking from the level real clean and it comes back into the level the same way, that's the one you want to be careful of. It's a break in and break out. Break in and breaks out uh, will hit your stop loss before you know it. All right. You want to, if it's one single candle breaking out, you want to see more than one coming back into your level to test it. Okay. So, all right. So what we have here is a clean break. And that's the first thing I'm going to do when I'm scanning through my pairs. I want to see the thing that will catch my eye is a clean break. All right. So so if that's a clean break, I also want to mark the place, the level where it broke away from, and that would be right about here, right? So I just want to make a mental note of that. And I want to mark it up. So when I start to see these breaks, I'm saying, okay, as soon as price turns around, that's where I want to start measuring, and I break out the Fibonacci, my Fibonacci's. Now, what you want to do is you want to anchor your Fibonacci at the beginning of the move. Listen closely to what I'm saying. The beginning of the move. Now, what we're normally taught is you go from the swing low to the swing high. All right, from here to here, right? No, because that's not the beginning of this impulse move. You want to catch the beginning of the impulse, all right? And you want to catch the end of it, right? All right. As soon as it starts to turn, when it starts to retrace, that's where you want to put your other anchor. All right. Also, you have to be ready to make an adjustment, because if it turns here and then you see this bullish candle next, it might go past this. That means you would have to raise it up, to wherever it actually starts to turn and come back towards that level. All right. Now, as I'm checking this level, I'm looking at these levels, how the fib aligns with structure, and you want the fibs to ideally line up with a previous low, the most recent previous low, preferably, not just this low and that low. No, you want the most recent low. Okay, that's the ideal situation. if one of these levels happens to be aligned with a key level, one level that was used for both and resistance and support, then you know that's a strong level. And if price is going to come down, it's probably going to stop there. All right, or at least react to it. All right. Also, you want to make sure that your 50 EMA is near or within your stop loss range. I'll get to that in a moment, but right now we want to make sure we're at the end of this impulse. So I'm going to click one. See, it's still going up. It hasn't turned yet. Now it's starting to, there you go. So now I got to make my adjustment. This here starts to make me nervous because it's different colors. As soon as you get that odd color candle, you say, oh no, I'm creating structure. And when price goes from here to your entry, that means on the way back, it's going to bump into these things and give a reaction. You know, what you don't want is for price to run into that and then it turns around on you and starts heading back towards your entry or towards your stop loss. You understand what I'm saying? All right. Now we got a turn here. It looks like it might be pulling back here. Let's see if this is the actual turn. Not yet. We're still going higher. Now we got two red candles. Now it looks like we're turning. All right, that's what we want. I don't like this. This here makes me a little nervous, but they're small, so you know I'm not feeling too antsy about it. But more than often, I will abandon a trade because it starts to build that structure. All right, because I don't want anything to impede the progress of my trade, my price going from entry to the target point. And you're always, I should have mentioned this, you're always going to make where it starts to turn, that's your first target point. That's your first TP. All right. Most of the time, that's your only TP. That's where you want to go, where it starts to turn. Okay. Oh. Okay. All right. Now, see, now look, the reason why this 618 is this 618 fib is marked the way I have it in red is because this is the most important one. This is the one that gets the frequent flyer miles. Okay. And price will more than oftentimes come back to this one first. And I see that it aligns with this bearish candle, and I see that there's some legitimacy to this doggone level here because you see it being used as support over here. I mean, resistance over here, and that's what you want, the point of resistance. And I align it like that. That's the way I do it, and I'll put my my stop loss right on that 618 line. This is what you want to see: the 618 aligned with structure. All right. Now, all we need is this to come into town and pick us up. Also, we have the 50 EMA right by it. Look, this is it ideally when the 50 EMA is right on your entry level. This is awesome because this is our dynamic support, and it will act as the dynamic support. It will act as our second wall. All right, giving us three confluences: the 618 fib, the 50 EMA, and the structure of the previous high. That's our three confluences, and that's what we need, and that's what we want. We just want to make sure the quality of the break of that level is high. You want to make sure that that's a high quality. This one is okay. This one is okay. This one is passable because those candles are small. But you know, again, you know, I already told you I'm a little skittish on that. You know, it starts to look suspect. All right, let's see if we definitely got our pullback going on. Now, this is what I ideally like to do. I like to set a pending, because once a price comes into the level, I just want us to get picked up and go on ahead. I usually like to make sure I get at least a 2-to-1 risk reward ratio, risk to reward, excuse me. All right, 2-to-1. All right, or 1-for-2 for some of you. All right, I want to make sure I get at least 2R on this. All right, let me move this on over. All right, I got my my fib is aligned with structure. I got the 50 EMA. I don't like it when it gets too far up ahead of this doggone this level, because then it starts to support this level and not this one. But it's close. It's close. So this is not a perfect setup, but it's close enough. Ideally, you want that fib to be something like that. Okay, that's ideal. All right, but this is close enough. So because it'll probably wick past that, wick past the EMA, but not close past the EMA, and it'll hit this level and then take off. Let's see what we got. And we're coming in for a landing, and we're watching and we're watching, and what we want to see is price hit that level and wick and give us a little wick. Give us a little wick off. This is a good sign for us. Let me get my pointer out. Boom. Okay. Yeah, this is definitely a good sign for us when we see some rejection. And that's what we got here. Got that little rejection there. Okay. Now, let's continue up. Every time you set these, when you set the pending and price comes into it and you see these setups, that's the reaction you want. That's the reaction you should expect. When you see a dull kind of reaction where it just goes, all right, it hits here and just goes boom, you know, it gives a little black candle, then it gives a red candle, and all that kind of reaction. When you don't see a good bounce, a good response, a good rejection, then you should start to worry. You should start to get concerned, and you start thinking about, all right, oh, what's my contingency plan? What, you know, I got to get ready to go to break even or something. You know, you got to be prepared for each situation. But with this, we got a great reaction, and that's what we want. And we're going to continue up. All right. I forgot to mention, once price gets to the 50% area, when it gets halfway to TP, you want to bring your stop loss to break even. All right. Now, a lot of times when it happens, it'll get past the 50% mark, and then it'll turn around and come and stop you out. That's what happens. But in back testing, excuse me, during all the back testing that was done with this strategy, more often than not, if you go to 50, if you go to break even, and price comes back to your entry and taps you out, more than oftentimes, if you didn't go to break even, it'll go to your stop loss. All right, more it's the percentages. It's like 55, 60%. So you want to make sure you put yourself at a break even. You want to protect your capital. All right. Now, and to finish this off, we're done. We have a successful trade here. Now, the question is, you might have is, what am I looking for when it hits this level? What you want to see is signs of exhaustion. This is a push phase. This part is the correction. All right. Impulse, correction, impulse. All right. ICI. That's what this is. That's the cycle. Excuse me. So I don't want you to be confused about that. Hold on. There you go. I don't want you to be confused about that. You need to know that's the way price moves. It moves in an impulse, a correction, and then again in another impulse. You never want to take your trade during the correction. You want to take your trade during the impulse at the beginning of it. You want to make sure you take your trade at the beginning of the impulse or the end of the correction. That's where you want to get into the trade. Okay. Because if you get into the correction stuff, that all of this here is correction. All of that is correction on a smaller scale. All right. Impulse. Oh, excuse me. Uh, you got your impulse here, you got your correction, and then you go up, and then it comes down. When you see all of that straight action, that strong push, when price is pushing, that is the correction. I mean, that is the impulse, and all of this here is the correction until it impulses. When it does another impulse, boom. All right, boom. That's the impulse here. This is the correction. All right, and another impulse, like the link I gave you. All right. Now, also, I want to tell you that this strategy works on every time frame. It works on the 1 minute, which this is. It also works on the 4 hour. It works on the monthly. All right. All you have to do is make sure you have your EMA in place. Your fib, your 618 is lined up. Sometimes it'll like you see this structure here. Sometimes it'll react at the 38. Sometimes it'll react at the 50, but more often than not, it'll go to the 618. You don't want to catch your set a pending or anything at the 786 because this is the last line of support and sometimes resistance. This is the last point to which it would start to retrace. It'll retrace to rather. And if it goes past here, if it closes past here, then you start to think, uh-oh, all right, this trade is about to become invalid. All right. So you want to bear that in mind. And then yeah, I need to mention that too. If price does go past your pending and it goes past the EMA and it goes past the 786, you want to hope you want to hope at this point to get back to your entry. And if price does make it back to your entry, you get out at break even. That's the way. That's part of the rules to the strategy. You want to make sure you get to break even, get out at break even, because if price comes near, this is the rule. If price comes very close to your stop loss and then works its way back to your entry, it's a very tall task to get it to make it all the way to TP. That's a big ask. Okay. So get out at break even, look for another trade. All right. If it goes, hit your stop loss, well, that's just part of the game. All right. But if it goes down deep and then comes back up, you get out at break even. All right. If it just goes halfway or 3/4 and it's still above the 786 and still above your stop loss, you're good to go. Just hold tight and hopefully it'll get you back to where you need to be. So that's a part of the rules. I think I covered everything. Knowing about how to work with the Fibonacci extensions and all, that's a different lesson. But quickly, if you want to find out how price will retrace, where it will retrace to, that's when you take your Fibonacci and anchor it at the beginning of the move to the end of the move, and you'll see what the correction will be. But if you want to go to where to set a TP where it might go beyond the point of its retracement, a TP2, all right, then you take your Fibonacci and measure the correction. you're measuring the correction. Here, you're measuring the impulse as it is. All right, anchor it here, and you're measuring the impulse, and it'll give you the retracement. But if you want to find out what the TP is, where it could go, what the extension, or how far the price can extend past the point of retracement, you measure the correction by anchoring it, moving your anchor to where where you have structure. That's your structure there, and that's where you're hoping that the Fibonacci aligns to. This is how you measure your doggone correction, and it gives you your TP2 and your TP3. You want to go to the one that is aligned with structure over to your left. You just want to look left and say, it goes right here to this point right there. You do see that, don't you? Right here. All right. And more than likely, it'll probably go right there. And this one is aligned up here. So you just leave a runner. Leave a runner going, or you aim for it and hold on to it. Do whatever you want. You know what I mean? But that's more advanced. Anyway, I think that covers everything. And I hope that you understand. Hope I made it simple. This is a very simple strategy. 3 confluences. You could recognize those confluences. Really simple. Just keep it pristine. Make sure you don't have different color candles going up or going down. You want to make sure they're all black and all red, or some of you have it as all green and all red. You know, you just want to make sure you have uniformity. Okay. Ask me questions in the chat. And if you have any questions, or if you got some comments, let me know. All right. Have a good day, and I'll talk to you later.